Hello everyone, welcome back to Chill Deal Trades, where I analyze the market so that you know what's going on. Today we're going to be covering maybe a stock that's not as typical for my channel, which is Google. And the reason we're covering Google today is to try to get a little bit of market sentiment. As you guys know, Google is a pretty large percentage of both the SPY and the QQQ, which are the NASDAQ and the S&P 500, and often these bit larger companies can start telling us a sign of where the market could be headed. And I also love Google as a company. I think that this is probably one of your safest bets you can make for over the next 10 years. If you haven't hit the sub button, go ahead and hit that sub, but let's jump right into things. So the first thing I want to call out, as I mentioned, is Google is a wildly profitable and amazing company. I don't know if you believe in monopolies in the United States, but Google is for sure a monopoly, whether the government says if we have monopolies. The first thing I want to call out is just their PE ratio. I mean, 31 going into a forward of 26. This company's not expensive. They're $1 trillion market cap. This is a crazy valuation in terms of how low it is for such a big company. You know, I think a correction could be coming, and that maybe that PE is a little rich, you know, when we're speaking historically, but based on the growth of this company, it's really not that bad. A couple other things we want to look at is like institutions. Institutions own up so much of this company because they know it's probably one of the best investments you can make on the market, along with some of the other big advertising kind of platforms and web search networks like Microsoft or even Google on the more the social side. These are companies that aren't going anywhere and they make ridiculous amounts of cash. I personally work in the advertising business, digital advertising, and I use Google on a daily basis. And I'll tell you that digital advertising isn't going anywhere, and it's only going to exponentially grow as the economy becomes more digitalized and we move more and more to e-commerce. And so this is a healthy company. And now let's go to a couple other things. So the next thing I want to go to is institutions, because something that I think is interesting is we saw a big jump in institutional buying in Q1, but we did see that slow down in Q2. And so I think this might be telling us a little bit of a story. When we get to the charts later, we'll break it down some more. But I think Q1, institutions saw an opportunity for this to run exponentially in the first half of the year. And that's why they slowed down purchasing in the second half, because I think institutions are feeling that the upside is more limited because of the crazy run that it's gone over the last year and a half, essentially post-COVID. But looking to the balance sheets, like when we look at their PE ratio, I mean, they're basically in line with a lot of the other brands. Obviously, some of the smaller companies have a much higher PE ratio because they're expecting much larger growth from there. But when we kind of take the average, it's a 37, where Google's at a 29. So it's not rich at all. You know, maybe historically speaking, it's rich for PEs. Compared to some fundamental ways that people value the market, but it's not expensive in the industry. And when we look at the numbers, like for a company that's worth $1.5 trillion or something, for them to be growing at 29, from anywhere from 15 to 30% a year, is just absolutely ridiculous. Like, look at the growth of this company. And yeah, it might be slowing where we saw maybe 15 to 40% in the past, but still growing somewhere between 10 and 30%, which is ridiculous for a company this big. It's not going anywhere. Amazing gross margins. When we look at the growth, it has slowed a little bit since, maybe 5, 6, 7, 8 years ago, but it's still really healthy where it's over 50%. So I would say there's no worries when it comes to financials of this company. When we look at the valuation, there's nothing worrisome. Institutions have slowed down a little bit, which is just something to be curious about. But let's go into the charts to figure out if a pullback is needed and maybe if that's giving us any read on where the market could be headed in the short term. So the first thing I want to look at is the weekly chart. And the reason, let's scale out a little bit real quick. The reason I want to look at the weekly chart is because I want to look at the other times that we saw a really high overbought reading on the RSI. So right here is where we're at currently. And we have 4 other readings about that high in extremity. Extremity? Tell me what word it is. But as you can see, back here, we saw a pretty big dip kind of in this area. Let me get my little fun tool out. Back here we saw a pretty big dip when we got to that high oversold or overbought. Here we saw a pretty decent pullback. Here again, a larger one than the one prior. And obviously we have the COVID crash, which is, I don't believe is going to happen, something like that probably ever again based on how the financial markets are set up. But if we're looking at, we're getting into that really high 75-80 range on RSI, and I think it's time for another more significant pullback. I don't think anything crazy, but let's go in first on the weekly charts and try to get maybe a price target if the stock continues to go up, and maybe where some support levels. And so the first thing I want to look at is if we do see more strength over the next month, I would say we're topping out at around 26 range in my personal opinion. I think we're due for a correction soon because of where we're seeing the readings, but we could see a little extra squeeze getting those retailers to buy back into things and then pull the rug from under them. But if it does go higher, I still, as you kind of see here, like we have kind of like an ascending triangle. And we did break out to the upside, but we also have off this peak, a little bit lower range. And so if we do move up, that's why I have this range circled, kind of where all these crazy trend lines are coming together. But if we do break down, I think if we see a really small correction, which I don't believe is going to happen, I think the first area is about 2390 is probably the first range of support. Because of how overbought we are, I do think we're more likely to get somewhere of a 10%-ish correction, if not a little bit larger. And so if we kind of look at things, we have the 20 moving average at about a 10% correction, which is at 2250. So I would say, coming into maybe something like this I think it's going to be faster than that actually, into August range, I think we might be able to get a 10% correction. If we see a lot of fear, kind of, we have the COVID stuff going back on with the Delta variant. There's a lot of fear, stuff with China, which, it still can have an impact on the US markets. Because of financial systems are connected internationally because we have a globalized world economy. But that would be a 10% range. If we somehow get more negative momentum, then we're also breaking a trend line. And something to look for is whenever you have these really big green candles, it's really easy for the stock to move to the downside because there's not a lot of pressure. Here it's really hard to break through periods of consolidation to the downside, but when you have really big candles, then it's really easy to move down. And so that's why I use this 10% range as the first area. But if we're able to get through all this past consolidation, I would say we're pretty quickly fall to this 2150 range. And again, if we continue to move farther than this, I'll personally be really surprised. But I would say these are some levels to look for to the downside. If we somehow continue to break down on the weekly of the 50 EMA at about 2000, even though I think that's really unrealistic. So let's go to the daily chart real quick just to see if we can find any parallels between the monthly or the weekly and the daily charts. And so, we've kind of been hovering around, I would say, this overbought territory for quite a while now. But that's just because we've been in a really crazy bull market since COVID. As you can see, this large trajectory upwards. And one thing I wanted to comment, I forgot as well, is when we look in the past, we've never really had this wild of a parabolic move. And that's why, in my personal opinion, I think we need to keep more of a trend line either coming something like this, either following this less intense trend line, or we need to come back eventually and make something a little less steep. This move of this trajectory is just not doable in the really long term. And so I think initially we'll have a smaller correction, and there would be more risk, I would say, as a lot of things are happening with how the government situating, or the Fed really is doing purchasing and interest rates. There could be more long-term impact, but in the short term, let's look at price targets on the daily chart. So the first thing I want to call out is kind of the price range. So looking at trend lines, looking at ascending triangles, we also come to about that 2600 range. So we see that on the weekly and the daily chart. That means that could potentially be the story if we do continue to break higher. But we're going to need a lot of volume to push back above the recent highs. Again, similar to the last one, around that 2350-ish range, we look at the daily, we see a lot of accumulation there. So I would say on a small pullback, this is the range we want to look at. But if we continue to see more, I would say, bigger negative momentum to the downside, past the 50-day, if we get below the 50-day SMA, then we're looking at this 2250 range, which, if we go back to the monthly, I think was, yep, at the larger, I think which we call a 10% pullback on the stock. I believe that's 10%. Let me know, do the math for me. I can't remember what I calculated earlier. So we do see some correlations there where 2250 is the 100-day SMA, and we also on the weekly chart saw that as a big support range. Again, very similar pattern. There's a lot of accumulation in this zone, so if we can hold that, that's really bullish, and I would say that's going to give us a trajectory of potentially bouncing off that and moving to higher highs over the second half of the year. But if we continue to break to the lower side, then, you know, like I said before, we'll pretty easily break through this range because there's not much support. And then we'll come down into this range, which is between 2100 and 2000. So those are some price points to look at. But kind of summing that all up, Google's an amazing company. I think they're one of the few companies that are going to do well in an inflationary or deflationary time. If you guys want me to make a video more on that aspect of Google, I can definitely do that. But in the short term, the readings are looking overbought, which I think is going to send Google down and will also pull the rest of the markets down. We're seeing similar charts in the Facebooks and the Microsofts of the world. And so everything is telling a small correction around 10%-ish. It could easily come to the market, so that's what we want to look out for. That's all I have for you guys today. If you made it this far, thanks for watching, and I really want to know your thoughts. Where do you think the market's headed? Do you have expectations, I would say, over the next 2 to 3 months? I'm really curious. Couple last plugs. Again, please sub if you haven't yet. I do a live stream on Twitch every Saturday and Sunday with my buddy. So basically what we do on Saturdays at 7 p.m. West Coast time, we jump on there, play video games, and talk about stock market news, what's been going on, where we think the market's headed, more of the big picture things. And then on Sundays, I do a Sunday free-for-all where you can jump into the stream, ask me any of your stock questions, and we'll do live charting as I do in the videos. And a link will be in the description for that, and that's called Stock Talk Game. But if you made it this far, again, you guys are the MVPs for watching through the whole video. And I do a video basically every day. So I'll see you either Friday or Saturday. See you guys.